Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about the beginning of the blame game and how a certain president wants a certain head of the federal bank gone. As well as that, I want to talk about the recent ECB decision. Trump has a happy phone call and a good meeting, apparently. And I want to ask the question whether or not yesterday's retail sales from the United States is potentially an indicator to us to what to cut in the future. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. With that out of the way, let's get started. So, where to begin? Basically, in a nutshell, Trump really wants to terminate Jerome Powell. He really does. Powell commented yesterday that the Fed will wait for greater clarity before considering any interest rate adjustments or any rate cuts. He also went on to say that Trump's tariffs would likely generate higher inflation and slower growth. So basically what he's saying at the moment is because of all this uncertainty with this trade, with the trade and these tariffs, the Fed can't move. They can't move. They can't risk, in his opinion, reduce interest rates. You can. And yes, he did say it's going to likely cause higher inflation and slower growth. So it's a bit of, a little bit, not criticism outright, but saying this is forcing our hand. We can't do anything at the moment in our judgment. Now, of course, Trump didn't like that. No, he didn't like it at all. He seems to think that if the Fed should cut interest rates, this is what he had to say. He said, he's always too late and wrong and should have lowered interest rates like the ECB long ago. He also went on to say he should have certainly lowered them now, as in, lower them now. Powell's termination cannot come fast enough. Because in his eyes, with all the market chaos which has been caused over the last couple of weeks, he thinks the answer to this, or one of the reasons to this, is, reduce interest rates, and that would help. So again, it's the beginning of the blame game. And the fact of the matter is, he's saying those words, Powell's termination, because obviously he didn't like what Powell said last night in reference to these tariffs causing higher inflation, and they can't act yet because they need more clarity. He clearly didn't like that. So this is what he's been saying. He wants him gone so he can maybe get someone to cut rates. I mean, Powell's time as chair expires in May 2026. Don't forget, the Fed is a separate entity from the government. They need to make their own decisions. They shouldn't be influenced by politics. And really the question is Powell in danger? Could Trump fire him? Technically, no, he can't. But, what we've seen over the last couple of weeks, with certain changes in Congress and things like this, you never know. But basically, he wants him gone. And I don't think Powell is the man to be turned. I don't think he will be bullied into taking what he doesn't want to do. But anyway, Trump definitely wants him gone. He can't wait for 2026 to happen if you can't get rid of him sooner. And Powell, like I say, at the end of the day, he's saying, I can't do anything because the drama and what you've done over the last couple of weeks has tied my hand. But anyway, talking of rate cuts, excuse me, the ECB, they cut rates for the 7th time in a year, pretty much as expected, what the market expected. Indeed, they say the ECB cut rates to 2.25% from 2.5% as expected, exactly what the market anticipated. However, Lagarde in her press conference took a bit of a dovish tone in her statement and what she had to say. And this is basically, in a nutshell, what she said. Again, very similar to what Powell said, to be fair. Outlook for growth has deteriorated owing to rising trade tensions. Again, this drama with tariffs. Increased uncertainty is likely to reduce confidence among households and firms, and adverse and volatile market response to the trade tensions is likely to have a tightening impact. So though she's saying, okay, that obviously they are reducing interest rates to obviously give the market a bit of a boost. Again, like a lot of let's say, like Powell said, there is so much uncertainty. Even maybe like a couple of days ago, we talked about Goldman Sachs and JP Morgan had better results. Both CEOs, following their earning reports, both of them said that we're unknown territory at the moment, totally unknown territory, and we can't foresee the future. At the moment, it is so uncertain, and volatility is going to remain. Before we have a quick look at the market, I want to talk about one other story, which is giving the market a teeny weeny bit of hope, and that is Happy Talk. The little hope, a little ray of hope that we can get some good trade negotiations under our belt and get things sorted. Because apparently Trump claims progress in talks with Japan in reference to reshaping US trade policy is looking good, is progressing quite nicely. He also mentioned, okay, that they had a very positive phone call with the Mexico president in reference to trade. So again, there's a little bit of hope to the market that we could find some sort of solution to this. Anyway, let's before we go to the market, we're going to do a currency update as well. As well as that, as we'll obviously look at the market, but I want to do a currency update too. So yep. So yeah, we're going to do a currency update. And I always want to ask a question as well. Is the market in a bit of a holiday mood? Because don't forget, tomorrow is obviously the markets are closed due to holiday season. So anyway, let's have a quick look at the markets without further ado. Let's bring it up and see what's happening. Let's start off with the S&P 500. As you can see, I really do generally think the market is in a holiday mood. Volumes are obviously low. We're closed tomorrow. S&P, as you can see, up a little bit, 0.27, but it's very tepid market today. Same with the dollar index, not the dollar index, sorry, the NASDAQ, up slightly, again, it's a 30-minute chart. We can see the market's been open for 45 minutes, not a lot of action. If we have a look at currencies as well, yeah, we still are seeing a weaker US dollar than we have done over the last couple of trading sessions. Euro dollar, like I say, still holding, more range trading than anything else. 1.1364. Again, very, very tepid. The pound as well, very, very sideways as well. But like I say, with the euro, this is something to watch in particular, because like we said, it's still trading around a 3-year high. Still trading around a 3-year high. And bear in mind, there was a lot of traders at the beginning of the year had written the euro off, even claimed the euro could go to parity sometime this year. Well, it's proven them wrong at the moment. There's something actually I want to cover on this. I'll cover this next week, because there is signs that there is a lack of faith in, we've talked about this already with the Bank of America Fund Managers Survey, lack of faith in, American assets. Don't forget, we did a video several weeks ago. We talked about this already. European stocks are outperforming US stocks, okay? Because of all this drama as well, there is a lack of faith in the dollar. So this is why the likes of the euro is really benefiting. If we move on, let's have a quick look at the dollar yen as well. Again, very tepid, but carrying on the direction it has been over the last couple of trading sessions. Dollar weakness, definitely. And finally, Max 7 is just, we'll look at that today. Finally, let me have a look at gold. Still trading right around the all-time high levels, just below it. We'll see it hit earlier on a new high of around about $3,356. Lower than that now, but still above $3,300 mark, trading at $3,013. But like I said, I really genuinely think the market at the moment is in holiday mode, just getting ready for a long weekend. Anyway, there is something else I do want to talk about. There is something else I want to talk about as well. And it's something that happened yesterday. And I talked a little bit about it yesterday when it came out, but I want to talk a bit more about it. I want to ask the question. And again, I want you good people out there to come in. Don't forget it's a live show, so you can ask me questions and comments anytime you want. I want you good people out there to share your opinions of it as well and see what you think, because I think we've actually seen our first indication of economic data about what things can come. Because don't forget, we've had, certainly from the US, a fair bit of positive data. With all the doom and gloom, everybody feeling really bad and really nervous about the future income of these tariffs and this trade war, the economic data has been pretty positive. Like we had a good NFP number. Inflation is falling. Okay, inflation is falling. The only negative real data is survey data, which is the consumer sentiment, which came in at 2-year low, lowest since November 2022. But the actual data on pen and paper, the actual hard numbers have been pretty positive. And of course, we've all been saying, well, because the effects of tariff and this trade war hasn't taken place yet. Fair point. However, looking at this data yesterday, I can't help think, but this is an early warning or an indication of things to come. And I'll tell you why. Because yesterday, US retail sales, US retail sales came in and was announced at 1.4% versus the 0.2% February's number. So it was a very good reading. The expectation, in fact, was 1.2%. So it came in higher and better than anticipated. But as I mentioned yesterday, the reason for this is the sudden rush of people trying to beat the tariffs. So this is my point. So what I want to ask. This is the retail surge in March. Okay, as we can see, it did actually surge, one of the highest surges. Okay, for a good long while. Okay, a good long while it surged, which tells me that though you can say it's a positive number, people are still confident. No, this shows to me that people are rushing out because they are nervous of future prices, so they're getting it in now before it goes up. So this is always showing me already, or potentially showing me, that the actual average consumer is very nervous about what's happening in the future, very nervous about prices. And we can see that, of course, we've seen this chart before. We can see this in the consumer sentiment as well. So for once, survey data is making sense of the actual data. It's sort of, in many ways, if you look at it, lining up. So I do think we've had our first glimpse of realistically what the market, also what the consumer is generally thinking and what could potentially happen in the future. Because say you've got low consumer and people rushing out now to buy stuff, then it all adds up to something pretty scary. It means that they are generally nervous. And indeed, they are generally thinking that they could be in trouble in the future. One other thing I want to talk about. Obviously, we're in earnings seasons. We have the banks. It's time for the big tech. So Netflix kicks off the big tech earnings season tonight. It comes in after the opening bell. I think there's a lot of anticipation to be quite a positive earning report. There is one report, though, which I'm really interested in, and that comes out next week, and that's Tesla's earnings. And that's due on the 22nd of April, the day after, obviously, Easter Monday. That, I think, and I've talked about Tesla a lot on this show over the last couple of weeks, because obviously Tesla's been extremely volatile, and it's come from, being a $1 trillion company to being like an $800 billion company, still not cheap. And we've talked about the fall in sales in Europe and in Asia. And we've talked about the drama and the attitude towards Musk for his involvement with the Trump administration and how that's affecting. So this earnings due on the 22nd of April, I think is going to prove to be very interesting indeed. So we'll watch out for that. Obviously, it's a bank holiday tomorrow, so I won't be here. But anyway, still, I want to get you informed for next week. A lot of manufacturing PMI next week. Germany, manufacturing PMI. EU, UK, manufacturing PMI. US, PMI. US durable goods. UK retail sales. And there you go. US consumer sentiment. Let's see how low that could potentially go. Don't forget, of course, this is a live show and you can talk to me anytime you wish, or ask me questions, or say hi, or share your opinions, anything like that, whenever you wish, especially if you watch me on YouTube. Is absolutely fine. As well as that, if you're indeed watching me on YouTube and you like this sort of thing, subscribe if you like, hit the notification button so next time I'm going live. And if you like this sort of thing and you put up with me, give me one of these. It's nice to know that you like what I do. As well as that, I'm just thinking as well, if of course you're watching me on YouTube, and I've noticed a lot of people go back and watch the recordings, which is great. They miss the lives, so they go back and watch the recordings. If you're watching the recording on YouTube and you have a question, or you want a comment, or you want an opinion, by all means, share it in the comments, below, and I will see them, and I will reply to them next time I go live on air, which, just so you know, so you don't think I've disappeared, with obviously the holiday break, it won't be till next Wednesday. That would be an exciting day because I can be talking all about Tesla's earnings. So make sure you join me for that. The same if you're watching me on Twitter or X, I get confused what it's called, and you like this sort of thing, by all means, give us a heart if you like. Okie dokie. If there is no questions, not a problem. Not a problem. Leaves me to say then, till next time, remember, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, the risks at hand for entering any trade. Till next time, every single one of you, trade safe.